Today is Thursday, July the 2nd. It's the end of the trading week. There's no trading tomorrow. And we were off this huge rip. So what we're seeing, and that leads me to think that we're into congestion, is that we're seeing selling the rip and buying the dip. So every time the stock moves up a huge amount, it gets cut off. There's selling, and then it comes down and gets bought again. So that leads to a period of congestion before the market's going to go firmly in one direction or another. But volume here tells the story. So let's look at our charts. Here's the McClellan oscillator today, which just inched up a little bit more towards the neutral zero line, but the volume was terrible. So all week long we've had this terrible volume. Even today, with such a big day where we started with these so-called great employment numbers, shot up, but the buying was no better than it was on Monday and Tuesday. And the selling was actually a little bit more than it was on Monday, less than Tuesday and Wednesday, but just no commitment. And the summation index, finally got this chart to work, is now starting to work its way down towards 3,000. So we may see the summation index go down a little bit further before it rallies higher, if indeed there's justification for that and there's a bullish market. What I think is really funny is the news, where now everybody's talking about masks. Yesterday, the Lieutenant Governor of Texas said he thinks that Fauci, he doesn't believe anything he says. Today, they're telling people to wear face masks. Only something that Fauci said weeks ago, if not months ago. So we've got confused politicians who are acting in the interests of the market and in the interest, of course, of themselves and getting reelected. And that is never a good thing for the stock market. Dow Jones today, sellers were sitting just below the gap. So we're going to look today at the importance of gaps in our charts and of the Fibonacci's. The NASDAQ 100 popped up again today. Let's get rid of that alert there. Popped up again today, closed with a new high, set a new high, and closed with a new high. So the NASDAQ is strong. It really was, I think, Tesla today. I didn't look at Tesla, but somebody said that Tesla was pretty strong. Let's take a look at, oh my God, yes. Tesla, remember when we were looking at that stock around 700? Let's not think about things like that. The S&P. The S&P is into the gap, but wasn't able to hit this trend line, which is a long dated trend line, goes all the way back to, well, certainly starts in 2007. And if we zoom into today, we finished the week right here. So we did hit the trend line and we pulled back on the trend line. The weekly shows it nicely, where we hit the trend line and we pulled back, something that we thought might happen. Volatility index is congested. Apple, still struggling with the 138.2%. Didn't make a new high today. That was made back here on June 23rd, and it didn't make a new closing high either. That closing high was made on that same date, the 23rd, but we opened higher, but we ended up dropping. The next we're going to look at is Amazon for Fibonacci viewers. 238.2%. This wave of February 2020, this coronavirus wave, is one of the important waves that's driving the Fibonacci's and the technical market. We're going to look at some other ones, but this is certainly a big one. And so the Amazon's coronavirus recovery, stalled at 200, is now tipped out at 238.2%. for the future, it's obviously a great stock, but there's going to be an opportunity for people who want to spend this kind of money to buy it a little bit lower if you have patience. Caterpillar. Caterpillar. Fibonacci's. There we go. Caterpillar is now pulled up to the 50%, and it is using a Fibonacci that goes all the way back to January of 2018. Now that's a pretty big range. Let's look at January 2006, where we did drop, but we came back up. Coronavirus fib would be right here. And where did we stop? 100%. So Caterpillar had recovered everything from the coronavirus and then pulled back and is now stuck at 78.2%. Facebook tipped out on 127.2. This is the coronavirus pullback. This is the coronavirus Fibonacci recovery, and you can see that we pulled back to a bounce of 78.6. Now we're stretching, looking for that 127.2%, but it really did have a drop today, 1.5% in a very strong NASDAQ. FCX we were looking at, and there could have been an opportunity to buy it today. Get rid of all these things. But what all it did was it popped up. We had set an alert to tell us if it moved up, but we didn't buy on the rip. Didn't buy at all, but look what it did. It just came back to fill this gap and close it, and then pulled back. So a gap and the technicals are pretty important. Home Depot, 127.2, but we're using here a longer term Fibonacci, one that goes back to this congestion period. Let's take the coronavirus Fibonacci, which would have a bottom here and a top up here, and Home Depot has recovered all of its coronavirus and then more, but then it pulled back. So coronavirus pulled back. Now we're getting into a congestion period, and it's pretty visible here on the Home Depot chart. Nvidia 150%. This is a Fibonacci now looking at the coronavirus here, February of 2020, down to the bottom, pulled back, got its 100% in here and stalled out, and then drove up to 138.2, 150%, and it stopped out. Walmart, we're looking at, this is a January to May wave, and it seems to be fitting a Fibonacci pattern very well. If you look at that particular wave down, we'd be looking at this wave down to examine if Walmart is going to pull back even further. It will probably mirror this wave right here. And we look and we can see that the Fibonacci's for this wave are pretty damn accurate. 178.6 was the top. 138.2 now has been the resistance for quite a period of time, and 127.2 was its last period of resistance. If we take the coronavirus, and where's coronavirus? Well, we won't, but you can do that separately. The other one we're going to look at is Whirlpool. Whirlpool was up $2 today. Its Fibonacci top was 78.6. Came down to get support here. Pretty much every day this week it's come down to test 61.8. Pretty good stock. Glad that I still have my 130 shorts. Because I really think that the market is going into this congestion period. So you can see if we look at the S&P on a weekly basis, we've got 1, 2, 3, 4, 5, 6 weeks now where we really haven't gone anywhere. Oops, didn't want to do that. So let's bring that in here. Let's just do it here. So we've got this 6-week period where it just hasn't done anything. After forming this congestion period in what we call this cup and handle, although it's not a fully formed cup yet, the S&P has not recovered. A lot of stocks have recovered to the coronavirus highs. The S&P is not one of them. So I still am thinking consolidation.